All right, so good evening, everyone. Thanks for joining me tonight. My name is Tyler Bollhorn. I'm the founder of Stockscores.com, and I've been trading for a long time, over 30 years. I will talk tonight for about an hour and go into really a focus on investing in the stock market. Not so much short-term trading, but the techniques, the tools, the thinking that I have behind picking longer-term trades. But I want to emphasize that I am still a trader. I believe in owning stocks when they are going up. And if a stock is not doing well after a couple of months, then I usually sell it and move on to the next one. I'm quite active that way. And I will give you a methodology, or at least the basics for a methodology that you can use to do the same. In the course of the evening, I will teach you a little bit about the theory behind what I do, why it works well, and I'll show you my tools, all kinds of stuff. So here's the itinerary for this evening. I'll give you a little bit of my history, how I got started in trading, and the theory behind the stock scores approach, which really had its genesis I would say 30 years ago. Actually probably about 27 years ago, with what I currently do was sort of defined about that long ago. And I'll talk a little bit about that. I will show you what I focus on each day when I'm looking for investment opportunities. I will talk about how long it takes. The opening question was, how much time do you have? I will show you that it doesn't take a lot of time to do my investing approach. And we'll take a little tour of the Stockscores Education Center, talk about the different products that we have at Stockscores. And then at the end of the evening, we're going to go in search of opportunity, try to find some stocks that maybe can make you money. And that's sort of my free gift, if you will. I know my presentations last round. I do this twice a year, and the presentation I did last round, we had some big winners that came out of the stock picking process that we did. So let's try and do that again tonight at the end of the presentation. All right. So how did I get started in trading? So I'm going to start with a little storytelling and sort of give you my history in the market. When I was 19 years old, I was a student at the University of Calgary studying finance. I actually started out studying accounting, but accounting wasn't what suited me. So I moved over to finance. And I thought it would be a good idea to learn a little bit about the stock market, since that was my degree course. And so I traded a stock trading game that was put on by TD Bank at the time. And I loved it. I did quite well, but I didn't really know what I was doing. I had probably a little bit of luck in the whole process. And when I would go out with friends, we would go to nightclubs, and instead of trying to talk to girls, we sat around and talked about stocks. That was sort of our thing. And there was a group of us that loved to trade the penny stocks because, of course, we were all starving students without a lot of money. And so we would talk about stocks. And I bought my first stock probably when I was 19. Pretty sure it was 19. I had about $3,000. Some of that was cash, and some of that was money borrowed from my Visa card. And so I began my trading career with borrowed money, which I don't recommend, but when you're 19, you have lots of time to get over problems that you might cause yourself. But I think the most important thing was that I really did love it. And I love the idea that you could sort of match wits or battle mentally with smart people all over the world and try to find those stocks that outperform the market. And so that was my passion. And after a year or two, I wasn't really making any consistent profit. I'd win some, lose some. I was doing okay, but not great. And then I thought, you know what? I was a bit of a hacker back then. I still am, actually. And I thought, I'm going to reverse engineer the stock market. Let's look at all the stocks that have done well and see if there was some patterns in their behavior before they started to do well, or at least early in the process of them doing well. And so I reverse engineered the stock market. And I can remember this like it was yesterday. I had a friend I lived with my parents at the time. I was going to university. But I had a friend who had an apartment, and she said, I'm going away for a week. She traveled a lot on business. And, if you want to stay at my place, you're welcome to. So I packed up my computer. Now, this was before laptops. I didn't have a laptop. I had a big, heavy computer. I packed up the computer. I packed up the monitor. I packed up the printer. And I went to her apartment and set it all up in the kitchen and just went through the stocks or the charts of stocks that had done well. Now, this was at a time when you didn't just go to a website to look at charts. You actually had to type in the symbol into this system where you would download data, and you would download the data, and then you'd import that into some software, and you'd be able to print out these rather crude looking stock charts. It was a very time consuming process. And what I had actually done was I had gone to the university business library, and they had books that showed the top performing stocks of the last 90 days, 1 year, 2 year, that sort of thing. And so I photocopied those books or those pages, and then I went and I downloaded the charts, and I just started looking through those charts. And I had big binders full of charts that I had printed, and I started to go through them in search of patterns. And I would say that, if I have one natural affinity, my superpower perhaps, is that I'm good at seeing patterns in things. And so over time, I started to see these recurring things that came up when I looked at charts. And I'm going to talk about them tonight because they're the same thing I still do. But this is how I started back as a starving student in a friend's apartment with old, heavy computer equipment, printing out lots and lots of charts and looking for patterns. Now, about the same time, I was in a university class where we studied the performance of companies, of stocks that had been bought out. So, for example, R.J. Reynolds, which was a cigarette company, bought Nabisco back in the 80s, maybe early 90s. I'm pretty sure it was late 80s. And of course, when a company buys another company, they're typically paying more than what that company trades for. So, if the stock was trading at $20 a share and there's an announcement of the buyout, that might be at $30 a share. And the 80s and the early 90s was a time when there was lots and lots of these buyouts. And, if you knew about the buyout before it was announced, you could make a lot of money because you buy the stock at $20 and a few days later, the deal would get announced and the stock would jump up to 30 and you just made a 50% profit in a few weeks. And so the focus of our class was to determine if there was evidence of insider trading before these deals were announced. And almost without exception, there was. All of these mergers and acquisitions at the time were almost always showing signs of insider trading. And what we did is we statistically analyzed the trading activity of stocks leading up to the news, particularly in the month leading up to the news, and we looked for statistically significant abnormal price action, abnormal volume. And again, almost every single deal had that. Now, if you might remember, in 1984, the Academy Award for, I believe, Best Picture was Wall Street. And that was really the subject of the movie Wall Street, was the mergers and acquisitions of the time, because that was the hot thing on Wall Street. And, Gordon Gekko uses inside information to identify stocks that were likely to go up on news because they were being bought out. And that's what we studied in this class. So that's kind of the environment that we were in at that time. And I think I took that class in the early 90s. I was reverse engineering the market around that time. And what I concluded was that there was always some people that had better information than others. And they acted in the market and they telegraphed, they told us with their market action, with their trading action, that something good was coming. And I built my entire trading career around that simple idea. And I will elaborate on that tonight. Now, that was the important study. I started with reverse engineering the stock market. I did this important thing in school. Then I graduated from university and I tried to get a job on Wall Street. And I had, I believe, over 60 rejection letters. I did have a number of interviews in New York, never got a job. And so I was kind of depressed about that because I really wanted to work in New York on Wall Street. So I came back to Calgary and I decided to build my first website that took some of these ideas that I had and put them on the internet. And remember, at the time, the internet's a pretty young thing. And so I was one of the first financial websites, certainly in Canada, but globally, there just wasn't many of them. And we had a website called Orex Market Masters, which looked for stocks that were trading abnormally. And that was the basis of my trading career for the next number of years up until today. So I've now got 30 years of trading experience. In the year 2000, I had built my second website, which is stockscores.com, which you hopefully are now all familiar with. And that tool was built to satisfy my itch, to scratch my own itch, because I was spending hours and hours and hours trying to find stocks that were behaving abnormally, and there wasn't tools out there for it. And so I had Excel spreadsheets. I would look at real-time quote terminals to try to find stocks behaving abnormally. It was very cumbersome and time-consuming. And so Stockscores was built to basically satisfy my own need for a tool to find what I wanted to do. And then shortly after I built the website, I had quite a large following of people that wanted to use the tool, but they didn't really know how to use it. And so that's when I started teaching, because the tool was expensive to build, hundreds of thousands of dollars. And I was lucky enough to partner with some public companies that sort of funded it, because I didn't have a ton of money at the time. And we built the first Stockscores website, and then we funded its operation through my teaching. And so I built a tool, but it was costing $6,000-7,000 a month for data. I needed to pay for that. I wasn't wealthy, so that's why I started teaching, and I enjoy teaching. I found that I was good at it, and I enjoy it, so I still teach today. All right, so that's my basic history into how I got into trading, how I developed my trading system. It's old. I mean, I've been doing it for 30 years, and yet today what I do is, although it's more sophisticated and faster, it's not a whole lot different than what I did 20 years ago. And some of you may have taken one of my first courses back in the year. It was shortly after 9/11 that I had my first course in Calgary. And I know that I still have some of those students are still customers of Stockscores, and you may remember that all of those years ago. I've got a little more gray hair now, a little less hair, but still trading. All right, so let's get now into the theory behind the Stockscores approach. So my aim, very simply, is to find market-beating stocks. And if you were in on the webinar that we did on Saturday, this recent Saturday, I talked about what is a market-beating stock. Now, if you missed that webinar, then please go to YouTube, Google Stockscores, or search for Stockscores on YouTube, and you will find my channel. And it was, a recent upload. You can find it there. So if you did miss Saturday's webinar, you can watch the video. It is up on YouTube. All right, so what is a market-beating stock? A couple of criteria. It's not simply enough that a stock goes up a lot. It has to go up in such a way that we can participate in it. The stock that goes from $25 to $50 overnight because there's a buyout of that company, to me, is not what I'm looking for, because I can't take advantage of that. I want stocks like this, where we've got a consistent upward trend and we can really participate in the gain. Now, whether we get in here or here or here, that's another story. Obviously, we want to get in closer to the bottom, and I'll teach you how to do that tonight. But this is, to me, what a market-beating stock is. It's one that goes up faster than the overall market and does so in a fairly steady upward trend without significant pullbacks along the way. This is a great example. I mean, this is about as perfect as we get, because it has gone up day after day after day since the middle of September, and it has almost gone up almost 400% in less than a month. So that's quite a dramatic gain. So that's what we mean by a market-beating stock, and that's what we're trying to find. So now the question is, why do stocks move in these strong trends? Well, for that, we have to sort of go back to some basic finance and understand what stock price is based on. The price of a stock is based on the company's ability to make money in the future. The job of the stock market is to figure out which companies are going to make more money in the future and figure out what those companies are worth. So in finance, if you take your first year finance class at university, they're going to talk about the present value of future earnings expectations. Very boring stuff, but that's what we're talking about. It's the present value of what companies make in the future. We figure out what that's worth in today's dollars, divide it by the number of shares, and that's how you get share price. And that's the theory of it. And that's what they taught me in school. I'm going to tell you that that's not really how it works. Yes, it is based on the fundamentals. Yes, stock price is determined by this argument that goes on in the stock market every day. However, to say that is simply this calculation that investors do about what the present value of future earnings expectations are is not really accurate. Because particularly in this market, emotion has a whole lot to do with it. Fear and greed weigh heavily in that equation. And although it's not supposed to work this way, stock price often moves based on supply of the stock and demand for the stock. We've got millions of new traders in the market since the COVID crash that began in February of this year. And because you have millions of new traders all chasing after some of these hot stocks, we are finding stocks that make these astronomical, irrational, nonsensical gains simply because there's such a demand to own their shares. And so we should not assume that a stock's price represents its true fundamental value, because that is not always the case. In the long term, yes, I think stocks go toward their true fundamental value. But in the short term, they can go far above it because of greed and far below it because of fear. You know, the price that stocks were trading at in March, April of this year, after the market had crashed on the COVID scare, was irrational. You could get some amazing deals on stocks. And if you participated in my webinars in April earlier this year, you will know that I gave you a little strategy to find some of these things. Why you would buy Apple, why you would buy Tesla, why you would buy Facebook. And all of those stocks were buys in March and April because they were irrationally low, and they then started to give us the signs that they were going to move up. Now, that was a very unique market. We used a pattern back then called a crash reversal pattern. We're not in the crash anymore. We are out of it. And so now we're going to teach you some other stuff tonight. I will teach you some other things tonight. But it's simple stuff. It's based on these charts. So this is a stock that has gone up. And why has it gone up? Well, its fundamentals are probably improving. But it's also the case that there's simply an optimism among investors about this company. It's one of the top performing stocks on the Toronto Stock Exchange this year. You can see that in May it was at $1.50 and now it's almost at $9. And yes, some of that will be because the perception of the company's fundamentals has improved, but it's also because there's just a bunch of people that want to own it. And it's that fear of missing out, that greed, that sometimes causes stocks to go irrationally high. It's all about information. The information that companies disseminate to their investors and to prospective investors is what motivates people to pay more for the stock. If I tell you that I have a company that has found the cure for COVID, a new vaccine, or perhaps a cure if you get it, that's a hot commodity right now, obviously. And if a company could announce that, their stock is going to go up. But it's the spread of that information that is important. But here's the thing. Just as I found in that study that I did all those years ago when I was a university student, what we realized is that there are always some people in the market for every stock that have access to information that most people don't have. There's always some people that know more about a company than others. And in that regard, the stock market is not fair. So what I did this afternoon when I was preparing this presentation is I looked at one of the hot stocks of the last little while. This is a stock that I've traded quite a bit recently, and many of our Stockscores users have traded it because it's been coming up on in our algorithms and that sort of thing. This is GameStop. I don't know a whole lot about them. I think they sell video games and exchange video games. You can bring your old games in and exchange them. And I imagine because of COVID, kids are perhaps, well, not just kids, maybe adults as well, are spending more time playing their video games and less time going to work or whatever, going to restaurants, whatever we did before COVID. And so this stock has done very well. Now, the company first gave us a buy signal right here, and I'm going to teach you tonight why that was a buy signal. The company announced their better than expected earnings over in here. But look at this day right here. This was the big gainer day. This was really when it started to go. On that particular day, it went from $9.50 to, can't quite see it here because my screen is cut off, but to $14, almost 14, 13 and a half. And that day, the company announced that they had a new partnership with Microsoft. So on that day, there was public news that justified the big price jump. But what I think is most telling is that the stock started pricing in that information down here. The improvement in the company's story started before the news came out. And it's the people that follow the company the closest that were buying back in late August, early September. They were doing so because they had better information. And if you're part of the public waiting for the news to come out, that's you buying up here. And the public is usually wrong. The insiders, the people that know the best information, are usually the happy people because they can buy early. Now, most of you here are retail investors. I am a retail investor. I sit in my house. I buy and sell stocks all day long. That is a retail investor. I'm a home gamer, as Kramer likes to say. But there's retail investors that are ahead of the curve, and there's retail investors that are coming to the party late. This is the group that's coming to the party late, and I do not want you to be in this group. I want you to be in this group. This is the group that knows the best information, that gets information the soonest. But you know what? We don't have to get the information, because the people that know the most, that get the information first, well, they leave a trail for us to follow. They cause the stock to behave abnormally, just as we found back in the 80s when big merger announcements happened and these stocks made big jumps in one day. Just as it was 20, 30 years ago, it is still today that some stocks will move before the news is widely disseminated. And it's very simple to find, and I'll show you how tonight. Now, what I'm going to teach you tonight is a methodology for finding these, and I talked about it on Saturday at that webinar. We'll talk about it again tonight. But what we want to do is recognize that trading the stock market is not a science. It's more of an art than a science. We are not going to be right all of the time. We're going to be wrong some of the time. It's just the nature of playing a game that has not got, a scientific outcome. If you put water in a freezer, it freezes. Always, right? If you go sit down at a blackjack table and, play the cards, there are certain hands that have a high probability of success. For example, if you draw a 20 and the dealer has a 6, for those of you that play blackjack will know that the probability that you will win that hand is quite high. But it's not guaranteed, because there is still a chance that it won't work. And this is the same in the stock market. Sometimes things don't work. Here's a stock that I found back on this day. It met all my requirements and it didn't work. And so it was time to take a loss right there, because it had fallen through this floor price, and therefore it was time to get out of it. And that's good. It saved a lot of pain, because the stock went even lower after that. So one part of being a good trader is also being a good risk manager. We need to manage risk effectively, and by that we want to take small losses, selling it here, rather than big losses by holding on and waiting for the dream of a turnaround. We should never hope in the stock market. Hope is meant for the church and the bedroom. There is no place for it in the stock market. So if we buy it here, we're always going to know where our exit door is, and if it falls to our exit door, we get out, we take a small loss, but we don't take the big loss. At the same time, when we are right, we need to let that trade work. So we need to be patient with our winners and have no patience with our losers. So here's an example of a stock that was one of my COVID picks. So I picked a bunch of stocks back in April. There was a buy signal right there. There was another one here, and another one here, and another one here, and another one here. All kinds of buy signals on the stock. And I actually bring this one up because one of my students or subscribers told me just the other day that he still holds this stock. He bought it. I'm pretty sure he bought it way back here. So that's like 1,000% gain. And he was able to do that by being patient. So one of the things that we do for determining whether a stock has a sell signal or not is use trend lines. So I teach a methodology where we just draw lines across the bottoms, and if those lines get broken, we sell. And you can see that we had our first sell signal here, and we've just had a sell signal on Tupperware, a second sell signal, a more conservative sell signal 2 days ago when it broke this upward trend line from a falling top. And those of you that have taken my courses will know I'm big on selling breaks of upward trend lines from falling tops, or selling parabolic trends when they break those parabolic trend lines. So there have been 2 sell signals on this so far. But there wasn't any here. There wasn't any here. No reason to sell these stocks back there. You stick with the trade as long as it is working. You need a methodology to do that. And that's, of course, something that I can teach you. So what do I focus on when I am trying to find winning trades? The first thing, and again, this is a bit of a rehash of what we did on Saturday. And if you have missed the webinar that I did this recent Saturday, please go to YouTube, search for Stockscores, find the Stockscores channel, and watch the 6 things you must know to make money in the market, or something like that. How to make money in the market, the 6 things you must know, I believe is the title. So the first thing we focus on is abnormal trading activity. What does that mean? If a stock normally kind of trades like this, with volume that's kind of like this, and then one day it jumps up in price and jumps up in volume, that's abnormal trading activity. That's what we looked for when I was doing that university class so many years ago. We were looking for stocks that were behaving abnormally before the big news came out. And that's really how I built Stockscores, was on that idea. I can remember taking my notes from that university class. I had recently graduated, and I went in and I found the math that we learned and built the Stockscores website based on that idea. We also want predictive chart patterns. I'll talk about predictive patterns in a moment, but the basic criteria, or I'll show some examples in a moment. The basic criteria is we want stocks that are breaking from low volatility, and we can define low volatility in a chart by saying if the bottoms are rising towards a flat top, we've got compressing price volatility. Or if the tops are falling towards the bottoms, we've also got compressing volatility. What that really means is the stock is boring, like it's trading in a narrow sideways range, and we're going to search for opportunities tonight, and I'll show you some examples. We'll go back to some of the other ones that we've looked at, but low volatility and then abnormal activity. That's the formula. Now you need tools to find that because you'll spend hours looking without the right tool, but I'll show you that as well. Now, risk management is so important. If we buy here, we have to plan to lose if it falls down to there. The number one goal for us as traders is capital preservation. And so I teach my students something very specific for how to manage risk, how to size your positions so that you can limit the size of your losses. Remember, losing is part of trading, just like losing is part of playing blackjack, losing is part of sports. You're going to lose. You're not going to win every time. And what we want to do is minimize the damage when we lose. And what most traders do is they hope for the turnaround. They hang on to their losers, hoping that one day it'll go back up and they won't have to feel the pain anymore. And what ends up happening is they hold on to losers for a long time, tying up their capital so they can't do anything else with it, and often eventually taking a very large loss anyway. So we don't want to take large losses. We want to take small, manageable losses. And there's a methodology to that in the risk management that I teach. Now, once the trade starts working, we want to have patience with those winners. We want to hold on to them even through those little pullbacks that inevitably happen. We want to stick with them. And so we need a methodology for sticking with our winners, for having patience with our winners. And we can use trend lines. We can use something called reward for risk lines. But these methods will allow us to stick with our winners longer and at the same time, if we're wrong, get out of our losers quickly. We are not trying to get in at the low. We are not trying to get out at the high. Those are the most expensive ways to trade the stock market. Do not try to get in at the low or out at the high. We want to pay here instead of here, because here was the signal that the stock was doing something exciting. All right, let's take a look at an example and put these things together. So this was, the stock that I looked at earlier. Now remember, from Saturday, we looked for optimism, which is rising bottoms. We had rising bottoms there. We look for stocks breaking through a ceiling price. That's breaking through resistance. Ceiling price occurs when you have an inflection point and you hit it again, and now you can draw a horizontal line of resistance. We're looking for abnormal activity, price breakouts through that resistance line, through that ceiling price, with volume that is stronger than normal. And notice that our stock scores spike up on that day. We want it to be above 60, above 80. Those indicate that there may be a break from a predictive chart pattern. So we're going to buy the stock here, and we're going to plan to lose if it falls down below there, which is the floor price before it took off. Now, if some of these things don't make any sense to you, I encourage you to go watch Saturday's session, about an hour long, because it's going to teach more of that stuff in detail. Tonight, we're going to apply it a bit more. We're going to go looking for opportunity. Now, once that stock breaks and we buy it here at 4 or whatever, we can use something called reward for risk lines to determine our exit. So notice what I'm doing. I'm drawing these lines equidistant apart from our original entry price and our original stop loss price. Now you may be saying, he's speaking a totally different language. I don't understand what he's talking about. Well, I've got in-depth education, tons of videos or lessons that will explain this stuff. In the interest of keeping my presentation to an hour, I'm giving you the big overview, but certainly there's a lot more that you can learn, and I'll show you how to learn that later. All right, so this stock does really well. It's gone up a lot. Entry signal was here. Why? Because it was breaking from optimism, through resistance, from low volatility, with abnormal activity, all the things we talked about on Saturday. Bing, bang, boom, up it goes. So what is working in the stock market right now? Well, the COVID crash really changed the dynamics of the stock market. I was on a radio show on Saturday, and some of you may have heard that, with Michael Campbell. And in that show, I talked about how the stock market has really been kind of the same for about 10, 15 years, which was a fairly low volatility stock market, not a lot of price movement. I mean, we had a couple crashes in there, but nothing really, not a lot of daily volatility. And that was caused by the fact that many investors moved away from individual stocks and moved toward exchange traded funds. And then on top of that, you had computerized trading, which would sort of smooth out the movements in the market. And for 10 years, it was hard to find alpha, especially for large investors. So many hedge funds went out of business. You could still do well as a small investor because you could just sort of take your money and run. I call them Steve Miller trades. And for those of you that remember Steve Miller's song, Go On, Take the Money and Run, you'll understand the reference there. But it was still, a harder market than when I started trading. When I started trading, we had lots of stock speculation. There was lots of volatility. And, for the first 15 years of my trading career, it was a very different market than, say, the last 10 years. Now, what COVID did is it broke that low price volatility environment. COVID has brought millions of new traders into the market. It has brought a lot of uncertainty, which causes volatility. And the market is a lot easier to trade now than it was a year ago because there's more volatility, more action. Now, we're leading into an election right now. So the last, say, 4 to 6 weeks have been a little choppier. I wouldn't say it was as easy in the last 4 to 6 weeks as it was for the last 6 months. But still, there are way more big gainers right now than there was a year ago. Every day I find stocks that are making massive gains because there's a huge number of new traders in the market who are chasing after the same stocks, and they're causing it to have a lot more volatility, a lot bigger gains because they push it all up with their demand. And it's a fun time right now. And so what we have then is a market where there's a lot of strong stocks that can make really significant upward trends as these crowds are chasing them. We call these alpha stocks. Alpha stocks are those that are trading on their own story, and they're characterized by abnormal volume. So the stock normally trades 1 million shares a day. These stocks start trading 3 million shares a day. So here's another example. We had a line of resistance there. We had optimism because there was rising bottoms on the chart there. We had low volatility because there wasn't a lot of price movement there compared to here, for example. And then we had a breakout right here through resistance from low volatility, from optimism. That's my formula with strong volume. I don't know anything about what this company does. I really don't care. What I know is that the people who know the most, who follow this company the closest, they were the ones buying it aggressively there, and I just follow them. I just do the same thing. Now that was a little over 2 weeks ago at $3. Now it's $4.50. That's a 50% gain in a little over 2 weeks without knowing anything. All that we did to play this trade was follow market action. But again, you need a tool to find them, and I'm going to show you that in just a moment. So I have many different strategies. You can see a list of my what I call investor strategies here. And each strategy requires a different amount of time looking for a different phenomenon in the market. So the Stockscores simple strategy and the Stockscores action breaks and the abnormal breaks, those are ones that I run every day. Bottom fishing is a strategy we use when the market's coming out of a correction. We're out of it now, so not really doing that one right now, but a few months ago it was giving lots of opportunity. So most of the time on a daily basis, I'm doing this one and this one. This one is more for stocks breaking downward trends. And again, we've been trending higher for a while. So I'm not doing that one so much right now. But there's different strategies for different market conditions. and different amounts of time that you can put into the market. If you can put 15 minutes a day into the market, whether it's during the trading day or in the evening, you're going to do this strategy right now or this one. Those are the two best ones. You can look for these two as well, but most of our picks come from this one and this one. Now you may say, I don't have time during the week. I only want to be a longer term trader. I want to buy 10, maybe 15 stocks a year. And I want to do my work once a week, 15 minutes a week, no problem. We've got strategies for that as well, 15 minutes a week. And again, the tool will find these for you as well. So what is the tool? How do I find opportunities? Well, I've built a tool called the Market Scan. It was built back in 2000. It's been updated a few times. And this tool allows us to scan the entire North American stock market. So the Toronto Stock Exchange, the Toronto Stock Exchange Venture, the New York, the NASDAQ, the OTC Bulletin Board, the American Stock Exchange. The tool will scan through over 10,000 stocks on a daily basis. You can do it many times throughout the day. It updates throughout the trading day in search of stocks that are making abnormal moves from low volatility through resistance, from optimism, the things that I've touched on tonight and that I went into more in depth on Saturday. It's a huge money saver, a huge time saver. It allows you to find the hot stocks before most people. Now, one of the things that traders often talk about is the need to have an edge in the market, to have something that gives them an advantage. And the Market Scan tool is an advantage because it will allow you to find things before most people do. So let's jump over to the Market Scan tool and just show how it works. Now, the first thing I'm going to do is actually show you the Education Center. So this is my website, stockscores.com. And we have all kinds of online education for people who have subscribed to it. I'm going to go into that Education Center now. And here we've got some basic videos here, which are free to watch. You can go watch those anytime. Then we've got our theory, which is in the foundation. So this is how to read chart patterns, how to do risk management, where should we put stop loss orders, how do you add to a winner with something called scaling, how do you develop your own trading strategy, all kinds of stuff there, a little bit on options. Okay, that's theory. A little bit more boring, but also important. What we're going to do now is go into the investor section where you can see the strategies. So there you see the action breaks, the abnormal breaks, the simple weekly strategy. Each strategy has a write-up. So I can click on this, abnormal breaks, and I can read a write-up on how that strategy works. I can also watch a video on how that strategy works. So I can just do this all online. You can do it from a phone, from an iPad, from a computer, and you get a little jazzy song to start, and there you get me explaining, teaching that online, something that if you are a member of Stockscores, you can watch as often as you like. All right, so we're going to take the abnormal breaks strategy, which is taught here. We're going to go into the Market Scan tool, and we're going to select from the presets. You see all these presets here? These are all strategies. So in the investor scans, we've got an abnormal breaks Canada and an abnormal breaks US. Now we're going to do this at the end of the presentation, but I'll just give you a little teaser now. We click on this. What it does is it highlights the active filters in the tool, highlighted in blue. So this particular strategy is looking for a breakout through 15-day resistance with abnormal price action, number of trades at least 250. And if I click on this button here, Run Market Scan, it goes through every stock that is listed on the Canadian market, and it spits out a list of the 6 stocks that did that today. We then view those charts to see if they have the right kind of chart pattern. And the online lesson, the video and the written lesson teach you what is a good chart pattern. And then you just go through them. You just hit your arrow key and you go through the charts looking for the right pattern. We're going to do that together in a moment. All right, so that's how the Market Scan tool works. Now, that was just one strategy. There's others. I can go back in. I could select the abnormal breaks US. I could select the bottom fishing, whatever I want to do. If you're only doing 15 minutes a week, Then you're going to select the weekly, Stockscores Simple Weekly Canada, Stockscores Simple Weekly US. Those are investor scans. Then we have here the active trader scans for people that are more interested in day trading and swing trading. But you can also build your own scan. You can say, show me all the stocks on the American market that are up at least, I don't know, 50% in the last 60 days, that trade at least 1,000 times a day. There's all these filters here that you can mess around with. It's a really cool tool. I use it every day. I've been using it since we built it in 2000, and it's awesome. So in that education center, as I showed you, there are those foundation lessons, which have 4 components. That's the theory. The foundation lessons have a written component. There's a video where I teach it. There's an assignment so you can practice it. And then there's a test so that you can make sure that you understand it. Once you understand theory, then you're ready to learn my strategies. So within the investor section, there's, I don't know, 6 strategies. In the active trader section, there's maybe 4. Investor is for those people that want to hold stocks for weeks or months. Active trader is for those who want to day trade or swing trade where you're holding less than 2 weeks. In the strategy section, we just have written lessons and videos. There's no assignments or tests because, of course, really the assignment is to apply the strategy, and the market will give you the test and the answer when you start applying the strategy. All right, so what is made up in the investor course? If you want to learn my strategies, you can consider taking the investor course. Investor course gives you access to the foundation theory lessons. It gives you access to the investor strategy lessons. It gives you access to the market scans in Stockscores for the investor strategies. You get email support from me. You get 6 months access to the market scan tool included. And then after that, you pay $300 per year to continue to access that tool. Now, what I do twice a year is I add in some extra live bonus training to help you learn this quicker. And so that will be starting November 3rd. So if you have an interest in taking this course, now's the time, because not only will you get access to all of that online material that I showed you, but I'm actually going to teach a number of live classes, kind of like what I'm doing tonight, but a lot more in depth, of course, where we specifically go into all of the theory on Tuesday, November 3rd and Thursday, November 5th. It'll be about an hour and a half each evening, starting at 6 o'clock Pacific time. Those sessions will be recorded, so you will get a video that you can watch later, but that's only for people that take the investor or the active trader course. I'm not going to talk a lot about the active trader course tonight. That'll be tomorrow when we talk about day trading. In addition to those 2 live classes where I teach you the theory one-on-one or live, I guess, the following week, we're going to practice doing market scans. Now, we're going to do some market scans tonight as well. We'll do that in just a moment. But for 3 nights, November 9th, 11th, and 12th, I will do market scans in front of you via live webinar. And I'll actually make you try to pick some stocks as well. And we're going to just try to find some winners. And I'll show you why some stocks are worth taking and why some are not. And I'll do that a little bit tonight, but not too in depth. Now, for those that take the active trader course, the additional free bonus that you get is you get a free month of my active trader live service where you can watch my analytical screens running in real time throughout the day. Again, we're going to talk about that tomorrow. I won't waste your time with that tonight, but tomorrow we'll go into that for sure. So if you have an interest in day trading or swing trading, make sure you register for tomorrow's webinar because I will talk about that stuff as well. So the special offer that is available up until Friday, October 30th at 11 p.m. Pacific time is that if you register for the investor or the active trader course, you will get those 2 overview classes. So that's 3 hours of live training, plus the strategy application series, which is another 3 hours of live training, a total of 6 hours of bonus training. I'm going to hold your hand through the material. you'll get that included. So the overview classes will be November 3rd and November 5th from 6 until 7:30 Pacific. And again, it's recorded. So if you miss it, or if you can't do it one of those nights, you can always watch the video. Better to watch it live because you can ask questions, but if you can't, then you can watch the video. We'll do the market scanning sessions Monday, November 9th, Wednesday, November 11th, and Thursday, November 12th. And then we will do, for those of that take the Active Trader course, you can do your free month of the Active Live Trading anytime you're ready. So you can do it in November, you can do it January next year, whatever you like. Now I do have a mentorship option as well. Mentorship is another course option, which gives you the Active Trader course and the Investor course and 14 one-hour live classes over the next 3 months. I will talk more about that on Saturday. So we have another webinar coming up on Saturday, this coming Saturday, and I will go more in depth into what each of these courses teaches. I'm just trying to give you the overview tonight, but we will go more in depth into what the courses teach on Saturday, this coming weekend. And there I'll talk a little bit more about the mentorship. So what is the prices? The prices have been the same for 15 years. It's all Canadian dollars. So I know we have people here from all over the world. And so you'll just have to convert it into Canadian, but you know, the US dollar is a lot stronger than the Canadian. So for those of you that are from the US, the prices are a little better for you because in your dollars, it's going to be cheaper. Investor $2,495 includes the foundation material. Active Trader includes all of the investor material plus the Active Trader lessons plus the Active Live session. And the mentorship includes the Active Trader, includes the investor, and that is $5,495. Now, if you took the investor course last year and you want to upgrade to the active, that's $1,250. If you are currently an Active Trader member or you plan on doing it, then to upgrade to the mentorship is $2,000. If you want to register for the course, you can do so online. It's all instant access. Once you've registered, you have access to the materials so that you can start studying right away ahead of the live classes that we're going to do in November. And it's a good idea to sign up sooner than later so that you can study the online material. You'll get that much more out of the live training that we do in November. But you can go to stockscores.com/learn or just go to the Stockscores website, go to Trader Training, learn how to trade. And there's a page there with a few videos about the different courses, more in depth about what each course teaches, and you can buy it right there. So you just click on that and it's all done immediately. Now you'll notice here it says membership costs $300 a year. You get 6 months for free included. After 6 months, it's $300 a year to continue to use the market scan tool. All right, so it's all simple, easy, everything's online. But of course, we do have a few more webinars coming up where I will talk a little bit more about what these courses are and also about what the Active Trader course is all about. All right, so I'm going to quickly launch a poll and then we will take your questions and we'll go in search of opportunity, see if we can find something that looks good. So I'm just going to launch this poll right now. Just give me a moment. I've got multiple mice going here and I have to pick the right one, different computers that are running. So I will launch this. I'm not a pushy marketer. It's not my style. So if you want me to send you an email about these courses, answer accordingly with this poll. And if you say no, I won't bug you. You know, unlike a lot of business people, I guess, is I actually don't want a lot of customers. I teach a small number of people every year. I'm a trader first and foremost. And if I teach too many people, then the opportunity goes away, right? So I actually don't want to teach a ton of people. So if you want to learn, I'll teach you. If you don't, hey, no problem. While I'm waiting for this poll to finish, I will answer a couple questions here. So someone asking about the performance of the market scan tool. If you are not a paid member, then it's really not the full tool. So you have to be either an investor student or an active trader student to use that tool. Now, one of these questions is cut off, so I'm just going to try to make it a little bigger here. If we enter into a bear market after U.S. election, do all these techniques still work? Yep, Yeah, I mean, the thing about markets is that there's a saying, the market takes the stairs up and the elevator down. And so we can make lots of money from markets going down because there are inverse ETFs that we can buy that go up when the market goes down. And you apply the same methodology that I teach for buying, you apply those to those inverse ETFs, or we can short sell stocks as well. So I make money whether the market goes up or down, particularly with day trading. Do I teach options trading? Not really. There's one module in the foundation area that teaches the basics of options. Many of my students use options to leverage their stock purchases, but it's not something I do a lot of teaching on. What metrics should we measure to assess our position trading performance? We want to look at average RR per trade, average reward for risk per trade. If you watch some of my other videos on YouTube on the free channel there, on Stockscores channel, there's stuff in there about that. How do you determine which strategy to scan to run based on market conditions? You can always ask me. If you're one of my students, you can always ask. But right now I'm running abnormal breaks and Stockscores simple. Do you suggest demo trading before going live? Absolutely. You should always practice first. And we have a simulator at my other website, tradescores.com, to do some of that practice. Is the CSE included in the market scan? It is not. We do have the CSE's charts, the Canadian Stock Exchange charts we have on the website, but we don't have it in the market scan. What's the downside to investing in ETFs? Well, they don't move very fast, so they tend to be capital intensive. For some people, that's a good thing. They want less volatility, and so that's good. Me personally, I prefer to trade stocks because there's just more action. All right, I'm going to close this poll down, and then we're going to go in search of some trading opportunities. So we're back in the market scan, or in the Stockscores website. We're going to go to the market scan, and let's run that Canadian market scan again and just look at some of these charts. So we have here 6 stocks to look at. And I'm going to go through this a little slower with you and just tell you whether this is good or bad. All right, so this stock we can see is behaving abnormally, abnormal volume, abnormal price, breaking a downward trend line, but what it lacks is optimism. One of the things I like to look for is optimism, and there's no rising bottoms on this chart. In addition, there's some resistance here. We call that resistance. It's a ceiling price, where price stopped going up and started going down. And it's likely that if the stock gets up to that price level, it's going to get stuck. And so the reward for risk trade-off isn't very good. So if I was to give this a rating out of 10, I'd give it a 6. 6 means pretty good, but not great. All right, this one really lacks volume. See, there's no volume there. So I would pass on that. I like to see the volume supporting it. This stock has a little bit of extra volume. Price action is abnormal, but it's underneath the ceiling. See there, it's got the ceiling that's been hit a few times. So that's not great. I'd give that a 5 out of 10. Now, you will be able to do this yourself if you take my course and you learn how to do this stuff. You start to understand what to look for. So let's take a look at this one. This is breaking a little pullback downward trend line. It has a slightly rising bottom. It's in a long-term upward trend. See how it's bounced off of this trend line a bunch of times? Then it ran away from it, came back, which is what we expect to happen, and now it's bouncing off of it again. I think this stock probably continues to do this. Not probably super exciting, but it's a decent chart pattern setup. I'd give this one a 6.5 out of 10. When I say 6.5, I mean I think it has a 65% chance of going up. Now, how do I make that assessment? You got to learn how to read chart patterns, and that's a big part of what I teach. All right, this stock, it's got a nice price pattern. Whoops. It is breaking through resistance from optimism. That's good. Why do I say optimism? Because the bottoms are rising. We talked about that on Saturday. Volume is good, but not great, a little higher than normal. Stock scores are in the right place. That's pretty good. Price action is good, not great. So at this point, I think it looks pretty good, but I want to take a look at the 3-year weekly chart as well. I always look at that as a second factor when I'm looking for these longer term trades. And again, I'll teach you all this stuff if you're in the investor course. And here I see a problem because there's resistance. Oops, I didn't draw that very well. that again. There's resistance I didn't draw that very well, right there. And there's also resistance right there. So it's going to hit these ceilings, and that's not too far away. So I don't think the upside potential is good enough. And so based on that, I'm going to give that one a 6 out of 10. All right, so we just analyzed the Canadian market. How long did that take? A couple minutes. Let's do the US side. We're going to run the scan. And of course, when you're starting out with this, it takes you longer. It takes practice to get fast. There's 52 stocks that are found with the scan. Now I'm going to go through these a little bit quicker, and I'll stop on something that I think is worth discussing. This one's kind of interesting. It's breaking a downward trend line. So this is something we call a crash reversal pattern. It's traded strong volume, breaking a downward trend line. So the daily interests me. I want to take a look at the 3-year weekly chart. And there I see that this stock really has been beat up, and it's starting to turn. So this actually isn't bad. It's been in a long-term downward trend, and now it's starting to move up, and there's starting to be some volume coming into it. So I'd give this a 6.5 out of 10. Moving along. Again, I'm going to stop on something that I think is worth discussing. And I'm looking for very specific things. This one's also not bad. It's breaking a downward trend line from a rising bottom, pretty good volume. Problem here is quite a bit of resistance at around $1.80 to $2. I'd give that a 6 out of 10. See if we can find anything that's a 7. To me, 7's the magic number. When I get a 7 out of 10, that's something I'm pretty excited about. I haven't seen a 7 yet, but we're not going to give up. So this ALRN was a 7 not long ago when it broke through resistance right there with some volume from optimism from low volatility. So this day right here, that was the day it was a 7 out of 10. So now it's up a bit already, so it's getting a little bit late. However, I'm going to take a look at the longer term chart to see what the big picture is. And there I see something that's not too bad. It's breaking through some long-term resistance. It has a little bit over here, but I think we're actually breaking through that. So, and it's got some volume coming in. I would give this a 6.5 out of 10 even now, even though it's up a little bit already. It looks like a long-term turnaround story, so that's not too bad. ALRN, that's probably the best one we've seen so far tonight. JP, got some abnormal action there, some abnormal volume. You can see the abnormal volume, abnormal price movement, and it's breaking from low volatility, and it has rising bottoms. So far looks really good. Now let's just see if the 3-year is good. 3-year chart is also pretty good. It's coming alive. It's surprising the market where nobody cared about it for a long time. Now it's surprising the market with some optimism. So this is, I would say, a 6.9 out of 10. It's not quite a 7 because there's a bit of resistance over here that worries me, but it's a very good looking chart, probably the best we've seen so far. All right, so that's the process. You just scan and look for patterns. All right, so that is the market scan. Here is the deadline. And again, if you want to get those $390 in bonuses, just go to Stockscores before October 30th to register. You can register tonight. You'll get access tonight. If you register in 2 days, you get access in 2 days. The more you can do to study the material before we do our live training on November 3rd and 5th, the more you're going to get out of the live training. So I'm going to put up my contact information. I encourage everyone to subscribe to the Stockscores YouTube channel. Just go to YouTube, search for Stockscores, subscribe to the channel. There's lots of free stuff there. If you have any questions about the courses, email me, tylerb@stockscores.com. In terms of stock questions, I only do that for my members, for my students, because I just can't do it for thousands of people, obviously. So, but if you have questions about the courses, I encourage you to email me, tylerb@stockscores.com. If you're one of my students, email me about any question you have. I'm happy to help. I'm going to just take a look at some of the other questions that have come in before we wrap up here. How many students do we have in each of our live? I only teach about 100 people a year, and I do it twice a year. So I expect we'll have 40 or 50 new students this time around. Do I think T.OSB has a good setup? You can take a quick look at this one. Just got to get up to where I can punch in the symbol. So Toronto Stock Exchange, we punch in T.OSB for the stock. And I would say no, it's not bad. It's just not good. And the reason it's not good is it's not breaking through resistance. If you own this, I would hold it, but I don't think it's a buy here. Do I treat $2 stocks with equal favor to $50 stocks? Yeah, I don't really care about the price. We tend to take smaller positions in the cheaper stocks because they're more volatile. So that's all part of the risk management calculation. But as long as it's liquid, to me, that's more important. I don't care so much about price. I care about how much it trades. A stock that trades more actively is giving us a more reliable message from the market. Is there a way to trade or just use the Stockscores scanning tool without taking the course? No, that's not possible. It used to be possible, but I just was getting overwhelmed with the number of students and people using the tool. And again, I don't really want a lot of people to use it. So, it's not a question of whether you know enough. It's a question of me wanting to limit the number of people using the tool. If you want to be part of my special club, you pay for the investor course or the active trader course. But to have thousands of users at Stockscores, that's not my desire. I just don't want to do that. And simply be out of selfish reasons. I don't want that many people to use the tool. Someone asking if I ever find a stock higher than 7 out of 10. Yep, but not very often. Eights is about as high as I will go. And again, that's reflective of probability. Do I find trades that have a 90% chance of working? I don't think so. I don't think that's realistic. I'm not going to do any more checking of charts tonight. We might do that on Saturday a little bit. So come back Saturday and we'll try to take a look at some stocks then. Is TradeScores a good tool for paper trading? Yes, that's what it's meant for. Is tradescores.com has a simulator so you can practice trading there, measures your performance, that kind of thing. Now, I'm probably missing some questions. We've got a lot of people in the webinar tonight, so there's a ton of questions, and I'm sorry that I know I'm missing some. My interface that I look at is quite small, so I'm probably missing a few. But anyway, I think what I'm going to do is wrap it up there. I did record this as a video, and so I'm happy to email that out to everyone. We'll wrap up the presentation now. Hopefully I'll see some more of you tomorrow and or certainly Saturday if you're not interested in day trading, but you do want to learn more about the courses. Check in on Saturday. We do that one at 9 in the morning Pacific time. So figure that out for whatever time zone you're in. 9 in the morning Pacific, of course, 12 o'clock Eastern time, 12 p.m. And hope to see lots of you there. Hopefully we'll see lots of you tomorrow as well. We'll talk more about day trading. It'll be a little more technical tomorrow because day trading is a little more technical, but hopefully we'll see some of you then as well. Thank you very much, everyone, for joining me tonight, and hope to talk to you soon. Bye for now.